Hello, welcome back to Cover Call Corner. I'm Denny Benson. This is my third weekly covered call session going over an individual stock. This week it's going to be MGM Resorts International. Again, these are my opinions and should not be taken as investment advice. Consult your investment advisor before making any investment. These transactions do have downside risk. All right, the stock I've picked this week is MGM. Famous for its Green Hotel on the Strip. I think it's a Vegas reopening play. Additionally, I think there's been such a big increase in gaming since the pandemic. And I think this plays on both of those themes. I think this is a patience sort of scenario. Where you could roll these covered calls from week to week and actually hold MGM for a period of time, because I think the price will appreciate. Right now it's around $39. I think it can appreciate to the mid 40s in the next couple months is my assessment. But let's look at the numbers. Okay, we always start off with our options chain. Again, I love using Schwab. And so remember, for an options chain, you need four things, as discussed in my tutorial presentation. You need the stock name and its symbol, MGM, all right? You need the calls section. Then you need the expiration date. I always like going out 1 week at a time. So here we're going to look at the March 19th MGM. And then when we sell a call, we sell it at the bid price. So this is corresponding with the strike price. So the four things are the stock, calls, expiration date, and strike price. And that gives you the corresponding cover call proceeds that you can sell when you sell the cover call. All right. So let's just look at this briefly. Again, after hours, the ask price went up about 20 cents from its closing price at the end of Friday afternoon. We've seen this a couple times if you've been following my weekly presentations. So we're going to use $39.18 as our buying price. These bid prices should actually go up a little bit based on this increase, but we're going to just stick with these and calculate the profits associated with that. All right, again, we start with our calculating maximum profit from the spreadsheet. Again, we put in the security, the purchase price, $39.18. Remember, that's the ask in the extended hours trading on Friday afternoon. No commissions by trading online with Schwab. The different call option strikes that were on the previous chart. Expiration is this coming Friday, the 19th. Here are the bid prices for these options. I've listed them here. Schwab just charges 65 cents per contract, so I've calculated that here. The net proceeds, remember, I've taken 2 cents off for the Securities and Exchange Commission fee whenever you sell something. So we're selling the call, so we will get anywhere from $30 to a couple $100. It's about 2 cents. Total invested is our purchase price minus the net proceeds from selling the call. So that's how much we've actually, you'll see how much your cash account will go down after you make these pair of transactions. And then the closing position if at these different strike prices. So if these strike prices hit, this is what you will get. It's 100 times the strike, but minus about 20 cents for the Securities and Exchange Commission fee. That's an approximation. Probably around 15 to 19 or 20 cents, but I use 20 cents as a conservative figure. The maximum net profit, so if you write a 37 call where the stock goes down over $2, you still can make $8. That's not, insignificant. I mean, it's something that's almost a quarter of 1%, 0.2 of 1%. In a year, 0.2 of 1%. It's about 5%. It's not horrible. But I'm going to focus on the 39 strike price, which is, you'll see, a little bit different. I'm actually going to pay more and then write an option that's a little bit below. So we'll see something a little bit different on the next chart. All right, so this is a profit and loss compared to the strike price. The orange dot represents the purchase price. The green arrow represents maximum profit at the strike. And then this is my break-even point, which is about $38.17. Now, I've seen MGM trade last week a lot of the time between about $38.50 and $39.50. So I picked the strike price about halfway in between to capture $83. $83 on an investment of just over $3,800 is over 2%. I'll take 2% every week. To me, this is good. So this is the first time where we've actually written in this weekly series a call at a strike price that is below the purchase price. So that's what I think is an interesting concept here, is the stock can actually go down a little bit, 18 cents per share, and we would still get our maximum profit. So I'm not betting on MGM taking a big move upwards. So that's a profit and loss chart for this week for MGM at the $39 call that I'm proposing. All right, comparing the calls at various prices, again at $37, I'll make a total of $8. $20 at $37.50 is the max profit. $37, almost 1%. If the stock goes down a whole dollar per share, I'm looking at making $83 if the stock just goes down a couple cents. If it does go up to 40, if you're chasing that, then you could get $145, which is a huge, over 3% gain. So in 1 week, and that's, part of that is price appreciation of the stock, and then the additional money from the selling of the options. So there's value to be made there. So, and here are the different values. Against no calls, obviously, you wouldn't write a call at these different strike prices if you knew it was going to be $41.50, or you would end up making more money. So even at my $39 call, I would make $83 at $40, okay? Versus if I just buy and held, I would have only made $82. So this is an example of why you do a covered call. If you think that the stock is going to stay about the same, maybe even slide a little bit, you do the covered call. If you think it's only going to go up 1 or 2%, that's why you do the covered call at that particular strike. But if you think it's going to go way up, then maybe you pick a higher strike price, or you just ride the stock. But I do like my covered call strategy. It's really working for me. All right, so what are my thoughts on MGM? It's another reopening stock. I like the gaming component of it as well. Well, why don't you just buy DraftKings then? Well, I'll look at that maybe in an upcoming week or 5 to take a look at that. But I like the visitor aspect of it. I think people will flock to Las Vegas this year. The heat of the summer, a little bit challenging. A lot of people, maybe going poolside a lot and enjoying the nightlife of Las Vegas, a lot of the younger people. But I think when this is really going to pick up, nobody attended a Raiders game at home last year, okay? When football comes to Vegas this fall, I'm expecting Vegas to boom. And I think that will really, really help MGM. So yes, it's March. I'm talking about football games in September. Maybe I'm a little bit ahead of the curve here, but that's okay. Vaccination rate helps make this possible. I think in the summertime, there's going to be a minor uptick, but by fall, Vegas could be booming. So I'm willing to hold and roll calls moving forward. I think this is a particular investment stock where, I'm rolling calls week to week. Again, please remember this is my opinion only. All right. As always, I go over recent activities. Carnival Cruise Lines did great. I rolled it another week. I will look at the strike price during the week. It closed around 28.40. I actually rolled to 27s again and still made a bunch of money. I may move a couple of my contracts up to 27.50 at that strike price to capture a little bit more of that. But I'm on board Carnival Cruise Line. That's why the boat's up there. And I hope to make a boatload of money on it. So we'll see. All right. So my first stock that I picked in week one was Tilray, marijuana stock. It did rebound. It did close up above 27 on Friday. If I had rolled the 26 call, I would have been up a total of 8% in 2 weeks. Again, having patience, I don't necessarily exhibit it all the time, but I felt really uncomfortable with it going down. I just wanted to avoid the falling knife. Obviously, like a lot of things, like a lot of retail investors, you buy at a higher price and you sell at a lower price and you're not going to make very much money. Fortunately, the covered call cushioned that blow, so I didn't really lose that much. So that's an example of why I do this strategy. All right, volatility matters. Still need to do fundamental analysis to make a judgment of where the stock price can go. Tilray, the other marijuana stocks, they probably do have a promising future as more and more states open up to legalizing marijuana, and maybe even the federal government will take it away from a class 1 drug and allow banking to occur for these firms so they don't have to do everything in cash, and that they can have a more secure financial system associated with that industry. So we'll see how that goes. Again, this is Covered Call Corner. Covered calls, if you want to learn more about them, I have a tutorial video on my channel. Please feel free to look at that and learn a little bit more. I hope you like my presentation, and please subscribe to my channel. And if you need some basic investment advice, let me recommend Derek Benson on YouTube. He does some great fundamental investing and just basic financial wisdom pieces on video, and I like his work. Obviously, I'm related to him. He's my son. He has an MBA from University of West Florida. He's a smart kid who knows a lot and is trying to share. So with that, this ends this week's presentation on Covered Call Corner. I hope you have a good week, and let's hope we're both profitable. Till next time.